This is the format how we propose our model. This will show you the whole 10-year tenure of what will be the projected sale. Here, if you're talking about year one is your financial year, this financial year. So this will be the sales forecast, sales budget of my respective store, which I'm proposing. Here in our standard business model, the sale forecast is 24 CR, 25 CR for year one. If I say year one, that is financial year 24 to 25. If you see the next row, which is a composite growth, which is year and year growth. So if you see second year onwards, I have taken 25% of growth. Usually my store also does up to 33% of the growth in second year, but keep the conservative numbers. We have kept it 25%. If you say sixth year onwards, there is a only 8% of growth, which is hardly a inflation growth. MRP growth happens. If I have to do it, I kept the growth conservative only. If you go directly to the revenue share row, that's basically show you about what will be your revenue share. This revenue share derived by the table below, which is a revenue share table. So I'll explain the revenue share, then we'll go back to the bigger table. So if you say here, the revenue share has been derived by the following slabs. So if the sales is 25 cr, every 10 cr you will get 5.75% of that 25 cr. For every 10 to 20 next 10 cr you'll get 4%, then 20 to 55% you'll get 2.25 percentage, and then 55 cr onwards there is a 1.7 cr. It's more of a like a income tax slab. For example, if I say there is a sale in 42 cr in fourth year, that means out of that 42 cr, on first 10 cr you will get 5.75, then 10 to 20 another, out of that 32 cr which is left of 10 cr which has been for 5.75, you will get 4%, and the balance which is your almost 22 cr 40 lakh, you will get 2.25%. So if you see the revenue share row, every year your revenue share is going up, the absolute money is going up. So that's how it is. Out of that revenue share which is your earning, you deduct your rental component which has been already considered in the model. Your take home will be the franchisee income row, which you say first year you're taking all approx 32 lakh rupees. 32 lakh rupees is the 9% of your total investment. In this model it is showing 3.62 cr. If you go ahead, every year your ROI is going up. So when you take an average of all the 10-year earnings on a lump sum of almost 17% of ROI, what we are talking about after deducting your rental component. So this is a glimpse and brief of the model what we're talking about. Here we have considered the sales. Here we have considered the rental escalations. Here we have considered your additional investment in 6th to 10th year. If you see the investment row, there is a first 1 to 5th year, there is 3 crore 62 lakh rupees. Next 6th to 10th year, you can see 4 crore 2 lakh rupees, which have added your 50 lakh rupees, which was the two component we have discussed earlier. 40 lakh is the refreshment and 10 lakh of the maintenance. So any future escalation in the rental, any future additional investment, everything has been incorporated in this model. Then this 17% of ROI, what we're talking about. So this is basically what we are talking about when it comes to model. Here we have taken everything exclusive of GST. So in this case, when you're doing the investment of 3 crore 62 lakh rupees, apart from the rental deposit, which is a refundable component, you'll have the GST component added to all the aspects. And here, when you talk about franchisee income, which is first year 32 lakh rupees, second year 46 lakh rupees, in all these components, the GST component will come along with you. So that's how it is. The all the numbers what we are seeing in the screen is exclusive of GST. That's how it is. We are talking about the model. I'm happy to take any questions. And Sandeep, Tanvi, you have to add something in this.
Well, I believe you've largely covered the entire understanding of the model. We can be open to Q&A, Sandeep, now.
Yeah, Sandeep, we are happy to have questions from your end.
Okay. So the first question which we have received is from Mr. Surya. He is asking what if sales of the store goes down and not able to meet the rentals of the store?
See, basically, when you talk about the budget of respective store, these are not the average out of any of, like, we're not taking anonymously numbers. These are the numbers on the basis of what my store have done last year, what is the respective cashment potential, what could be the next year budget. So these are the numbers we have done by our homework. But there are the scenarios, if there is anything goes haywire, we have measures to take care of that.
Okay, and during the process of this franchisee discussion with multiple investors, we are facing some queries repeatedly. I want you to answer them so that our audience can get benefited. So, just to make sure to our audience, we are talking about those stores which are already open, and we are talking about taking care of those stores as a franchisee of Chroma. We are not talking about a existing, rental space which you want to convert into a Chroma. We are not talking about those. We have 25 locations. We can get in touch and we can discuss about those locations, right? Now, the next question is from Mr. Srikant. He's asking, can you give a glimpse of locations which are open in Hyderabad, if any?
So we have pan India location available, and specifically when you talk about Hyderabad, we have few stores we can discuss one to one, Sandeep.
Sorry?
We can discuss those stores numbers one to one. We do have some stores to propose in Hyderabad.
So he's asking that, whether we have any space or not. The answer is yes, we have. We
Yes,
can
we have.
we can connect on one-on-one basis to talk about the locations and the numbers for the same, right?
Correct. Specifically, we can do that.
Yes. And okay, the next question from is Mr. Sridhi LLP. He's asking, do we have any MG?
No, so there is no MG. There is an upside. So I am gonna propose the model on 16 to 17% of ROI on the respective current budgeted sales. That's how we work. The moment the sale goes up, on the same slabs, your ROI goes up. So the upside is there. So this 17 goes up to, say 18, 20, 25% as well, because you are attached with the top line. Sales goes up, your returns goes up. So there is no MG, but there is an assurance of Tata brand. That's there. We have done that homework that this whatever numbers we are proposing in the year one, this at least this should be there. Then only you achieve your 16 to 17% of ROI. So there is a upside, but there is no MG. If I have to answer the question.
Okay. So thank you for answering. Next question is from Mr. Aman Lunia. He's asking what are the locations available. As I said, we have 25 locations available across pan India. We can share the same with you on a one-on basis, and then we can also talk about the business opportunity for the same.
Correctly,
Uh,
just Sandeep, just tell everyone. I'll address everyone. Everyone, we have pan India location available. All the region across the India, we are happy to do one-to-one discussion for specific location, irrespective your reasons.
Okay. Now the question is from Ms. Mahib Gupta. He's asking, can you contact me directly and send me the documents and agreements to consider it in detail? Yes, yes, Mahib. What we can do is after this call, we'll get in touch with you. We'll share the expression of interest form in which you can share your details, and we can have a tri-party call with Ms. Priyanka and her Chroma team, so that we can have an in-depth discussion one-on-one basis. Okay. Okay, the next question is from Mr. Pratik. He's asking, I have a own space. Can you open a store in Modasa, Gujarat? No, as we said that the locations are already there. These are existing Chroma stores. We are looking for franchisee to take it over and be a partner of Chroma, right? And it's a FOCO model wherein you will be the owner and the franchisee will be the owner, and Chroma would be operating those stores on behalf of you. But yes, you will get a considerable amount of profit out of the same. The next question is from Mr. Ahmed. He's asking tier 2 and tier 3 will be considered. As discussed that the locations are pre-decided and we can share the locations with you, right? Okay. Priyanka, before we in this session of Chroma, do you want to add any point, any closing remark from your end?
So basically, we have covered everything from our end. But again, this is as I've shared earlier as well. This is basically we are looking for the HNI clients who wanted to have diversify their portfolio. This is a passive income what we are talking about, and this is basically upside is always there in this model. So whatever, just to give you a addition to the last screen what we have shared, all these numbers are the conservative numbers. if we have X project, currently the experience what we have seen, that we have projected 20 CR, the store have ended up doing first year 25 CR. So that kind of the conservative numbers approach we are doing as realistic as possible. So that's how the about the model. Tanvi, you want to add something to conclusion marks?
Largely, we've covered and we've answered everything. Uh, Thank you so much, Sandeep, for giving us the opportunity to be here today and address the audience on the proposal that we have to go through.
So, we have heard the business opportunity from one of the most trusted business houses of India. And when brands like Chroma extend their hands to join hands with franchisee owners, it is just about enjoying their profitability and sustainability and the trust which they have enjoyed over the years, decades. And this is a fantastic opportunity. Thank you, Ms. Priyanka. Thank you, Ms. Tanvi, for giving your time on a Saturday to share the business opportunity. As we said that we have got some queries from our investors who are asking to connect them on live. We'll touch base with them after this call and have a tri-party call with you to discuss one on, right?
Thank you
Thank you
so
so
much,
much.
Sandeep. Thank you everyone. Thank you so much.
Thank you. So our next brand is Palmonas. We have Miss Pallavi and Dr. Amol from Palmonas, and I think we just talked about a brand which is decades old in this organization in India, which is Chroma. Now we are talking about a brand which is newly launched. It has only been 2 years, but they are making the right buzz in the industry, so much so that most of the franchisee owners, we don't even have to contact them. They are rather a happy customer of Palmonas and reaching out to us to join hands with them. So nothing like that. We always say in marketing that nothing like one-on-one, word of mouth communication from customers. And when we talk about word of mouth communication, I think Palmonas is quite synonymous to that name. So we have Miss Pallavi and Dr. Amol. Thank you for joining us on a Saturday. Hope you are having a cozy weekend. So if you can share your screen and take us to the business opportunity.
Sure. Hi Sandeep. Thanks for the introduction, and hi everyone. I'm just sharing my screen. Can you guys see my screen?
Yes.
Okay. So guys, I'm Pallavi. I'm the founder of Pulmonas, and we also have Amol. So we started Pulmonas 2 years ago, and with a vision of creating a very solid brand in a wide space, which is in between fine jewelry and imitation jewelry. So fine jewelry is basically made of pure gold, diamonds, platinum, all the pure metals, versus imitation jewelry is made of materials like brass, nickel, which are little harmful for your skin. So dermatologists don't recommend you to wear imitation jewelry. And anyways, because if you wear it 2-3 times, it starts to tarnish, it starts to turn black, it reacts with your skin. Hence, you cannot wear imitation jewelry every single day. So then what are the options for you to wear jewelry every day, right? So then you're only left with gold. Now you all know the prices of the gold are soaring so high, and it's also not possible for everyone to have multiple pieces of gold which they can style every day with their looks. So there has to be some alternative which is as classy as gold, and it comes at a fraction of the price of the gold. So that's where demi fine jewelry comes into play. Now demi fine as a segment is huge outside India already, but in India, nobody knew what demi-fine was 2 years ago, and we are the first demi-fine jewelry brand of India. Um, since we've launched, we started first online to do the product market fit. Then we saw amazing traction online within the first couple of months. So we started our first store, which is our Coco store. It's based in Kurega Park in Pune. It's a beautifully done store, and we see humongous response in that store. So we see people traveling right literally from 35 kilometers away just to visit the store and buy in the store. So with those learnings over last 1.5 years, we've realized that offline store is something that is very, very profitable. And we want to grow our offline base very aggressively and quickly in next. So we want to open 30 stores in next 6 to 8 months time period. And all of these stores are going to be FOCO store. So talking about the team, it's me, Amol. Amol is an orthopedic surgeon. So he used to do knee replacement, hip replacement, and now he's full time involved in the business. And our third co-founder is Shraddha Kapoor. She's a Bollywood actress. So the image that you can see at the bottom right corner, that's our first flagship store. It's in Koregaon Park, and that store is doing amazingly well. Um, I think this I've already spoken about. This is the problem area that I was talking about. The huge gap that exists between players like Tanishq and players like Voila is called demi-fine, where we are actually fitting in very well. The market is huge, right? I mean, people can never stop buying jewelry, and people will never stop buying gold also for occasions like weddings and as an investment. But people like me, or women who are working professionals, they are going to wear jewelry which is classy, but also at the same time they don't want to spend like thousands of rupees on one single piece. So that's where demi fine jewelry comes into play. As you can see, the jewelry market is growing at the CAGR of almost 5%. So these are all the basic details. So now I'll explain the differentiation between the technology that we use. So on the left hand side, you see solid gold, which is pure gold material. On the right hand side, you see material like brass, which is the base metal. And on around that, you see a very small layer of gold, which is 0.05 micron layer of gold. It is called flash plating. And everybody in India currently who is selling plated jewelry is doing flash plating on the jewelry. That is the reason when you wear it for a couple of times, it just wears off and it starts to fade or it starts to tarnish. What we do differently is, if you see, the center material is either a sterling silver or surgical stainless steel. Both the metals are neutral metals and they do not react with your skin. So it's 100% skin friendly. And if you see that the thick layer of gold that is around the metal is very thick, it's 2.5 micron thick versus 0.05 micron, which is generally done in the market. So that's why our jewelry ends up looking exactly like gold jewelry, and it lasts for a very, very long time. Also, all other benefits of gold, like you can use it every single day, you can use it in shower, you can use it in swimming pool. I mean, there are literally no do's and don'ts of the jewelry. So you can use that jewelry as a pure gold jewelry. So that is why our brand is basically now differentiated amongst the whole saturated market of jewelry right now. So the target market is around 23 to 45-year-old, majorly females. But this also has a huge gifting angle. So recently we've seen almost 45% of our orders are gifting orders online. Yeah, so if, people in this age bracket who are like millennials, working professionals, corporates, who basically look at jewelry as an accessory and not as an investment, and they love to dress up every day, they follow trends, they follow Bollywood. So all of these people actually fall into our target group. So this is a little bit of positioning chart where you'll get an understanding of where we lie. So in this area, our closest competition is Jiva. But again, like I said, our products are way more superior in terms of quality compared to Jiva, and that's when we've scaled up very, very quickly. Our repeat purchase rate is almost at 30%, which is a very high repeat purchase rate in this category. The one on the right hand side bottom, the picture that you see, it's our first franchise store. This store we launched in Pune 3 months ago, and that store is also doing very, very well. So currently so we've got a lot of PR around demi fine as a category, because it's a very new category in India and people are very fascinated about it. So talking about the model a little bit, I think we do a small size store formats, which is 300 to 500 square feet. It's a FOCO model. So company would be operating the store. Company will be bearing all the operational costs, which includes rental, staff salaries, maintenance, and marketing. So everything will be done by the brand. The initial investment to set up the store is close to 15 lakh rupees. The franchisee fees is 5 lakh rupees. And we also take an inventory deposit of 15 lakh rupees, against which we keep rotating the inventory in the store. So against 15 lakhs, we put around 40 to 50 lakh rupees of inventory in the store. There's 10% minimum guarantee on your investment. Now, when we say investment, we also include the 15 lakh inventory deposit, which is 100% refundable at the end of the tenure. So total investment becomes 35 lakh rupees. So 10% on your total 35 lakh rupees is the minimum guarantee that we give you. The revenue share is at 15% of net sales. So whichever is higher will be paid to you. Revenue share will be paid on a monthly basis, and MG triggers on a yearly basis. So average monthly revenue our current stores are doing is between 8 to 10 lakh rupees. Break-even period, we say it's 24 months, but it happens much before that. And the contract period would be 5 years. So the tenure will be 5 years. So these are the very basic terms, and we've kept this model very, very investor friendly, because we have basically secured your bottom line with an MG, but there is no cap on the top line. So suppose this store does around 20 lakh rupees of sales during Diwali, then your payout becomes 3 lakh rupees. It is not capped at any certain level. So as the store grows, as the store settles in, you will see the improvement in your returns coming to you. So I think the ideal partner profile that we are looking at is basically somebody who is really passionate about doing something of their own, who understand jewelry business. I think that'll be like a cherry on the cake. And also investors who have patient capital, right? So because we are not looking for in its franchisee investors, we are looking for a partner who would grow with us in that particular store. So people with local contacts, people with local standing, I think would be very helpful for us to gain that initial traction. So I think somebody who is, like I said, who is passionate and who really wants to be a part of this journey with us, those kind of investors are most welcome. Now, why partner with us? So, we are serial entrepreneurs. Before Palmanas, we had a brand called Karagiri. Karagiri is the India's biggest digital first sari brand. We sold that brand to Mensa Brands before we started Palmanas. So we have an experience of starting and scaling the brand. Secondly, we are treating you not as just investors, but as our partners. So we want to travel this journey with you. So that's why I think the whole support that the brand is actually giving to make that store successful is phenomenal. Also we have Shraddha Kapoor as a partner, and she's 100% involved in the business, and completely hands-on in growing Palmanas with us. So that is a biggest advantage, because in our category, this is a very impressionable category, and somebody like Shraddha Kapoor actually being a part of it, who keeps visiting the stores, who keep promoting the content online, and who is a face of the brand. I think that's a very big deal for this category. So I think that is one of the bigger plus points as well. In terms of support, I think all kind of support is given by the brand, right from store setup to training the staff to marketing the store, to everything is done by the brand. So I think there's nothing that we really expect from the investor beyond trusting us, and being there for us throughout. So that's about it, guys. Would be happy to take any questions if you have.
Pallavi, just a small request. Can you just take us through your website once?
Sure.
So, audience, the very purpose of actually taking you through the website is, you have already seen the kind of outlet which they have started in Pune. This is as beautiful as the website which they have built, and I surely think that going through their website will give you an idea of the kind of things which they are making, and this will surely make you fall in love with the products.
Can you guys see the screen?
Yes.
Yes, so this is our website. In the introduction, we say it introducing demi-fine jewelry. So that's where we actually intrigue the customer as to what demi-fine is and how it is different than the fashion jewelry. Like I said, Shraddha is currently the face of the brand, and so we've recently launched her AM to PM collection, wherein we've styled her in using different jewelries in different looks from her AM to PM. So we are almost halfway through this campaign, and it's performing absolutely well. So we have different use cases for the jewelry, right? So jewelry for office wear that you can use every single day. Then the date night jewelry where we have little, classy and blingy pieces included. Then we have coffee run. So even if you're just going out for a coffee with your friend, it's just like a very effortless kind of jewelry that you can put on. You can see a lot of celebrities already wearing palmonas. So this is Disha Patni, this is Amneet Kaur, this is Alavia Jafri, this is Manushi Chillar. Um, then this is, I don't know her name, but she is one of the celebrities that recently wore palmonas. This is Janvi Kapoor. We have Ananya Pandey, we have Deepika Padukone. We have all, like, you name it, and that celebrity has worn palmonas. So we have all of these pictures that we display. Even in the store, we put all of these pictures in a lookbook for people to take the style inspiration. So we have now this. So this is an old number. Now we've served more than 1.5 lakh customers online. So this is our website, and then we have different collections. So we have Mangal Sutras. So we have all of these very modern sort of Mangal Sutras. These are basically, these have sterling silver as their base metal, and they are plated with 18 karat gold vermeil. So we have couple of little traditional designs to these kind of modern designs where there are just a few black beads available. So Mangalsutra is one of our best-selling categories, by the way. So these are the Mangalsutras. Then we also have necklaces. If you see overall, the vibe of the website is also very clean and chic, and also little international. If you see a lot of faces, these are all international models. So basically, we are not just trying to create a jewelry brand, but we are creating this aspirational lifestyle brand where people would want to be a part of this clan. So the designs are very, very minimalistic and perfect for everyday use. So we have like all kind of we have rings, we have bracelets, we have earrings, we have men's collection also. So I think this is basically it. If you guys have more questions around this, I'll be
So
happy to answer.
yes, thank you, Ms. Pallavi, for sharing this detailed presentation and taking us to the website. So we have a query from Ms. Shruti. She's asking, what is 92.5 silver jewelry?
Yeah. So what about it?
So she's asking, what is 92.5 silver jewelry?
Okay, so 92.5 is called sterling silver. So 92.5% of silver is used, and remaining used is alloy. It's a combination of different metals. Now 92.5 silver is more malleable, so you can create more agile designs using 92.5 sterling silver, and it does not oxidize as fast as your pure silver. So if you have anything in pure silver, and if you just keep it, you have your diyas, etc., right? So whenever you have to use it next, you have to clean it properly because it oxidizes and it turns black. So when you make jewelry out of it, 92.5 sterling silver is a preferred option because it is more malleable, and it does not, those oxidation properties are little tamed down in 92.5 sterling silver. I hope I
Okay.
answered.
Yes. Next question is from Mr. Satish Mohan and Amar Lunia. I'm combining the question. Both of them are asking, these FOCO models, are they only for metro cities? I believe these are for tier 1 and tier 2 cities.
Yeah,
right?
so majorly tier 1, tier 2 cities. So currently we are looking at Mumbai, Bangalore, Hyderabad, Delhi NCR, Gurgaon. In fact, we also have, so we have acquired a couple of locations which are strategically right for the brand. So for example, we have 3 locations in Gurgaon available now. We have 2 locations in Mumbai. Then we have 2 locations in Pune available to take up. So we are basically first locating the locations according to the brand's strategy, and then we're putting the right investor into those locations. So this is absolutely location agnostic. So somebody sitting in Hyderabad or Bangalore can also invest in a store in Pune, because anyways this is going to be company run, and all the transparency is maintained because you have accesses to the software, you have accesses to the CCTV camera, so you can anytime get into that. So yeah, so that's about it.
Okay, so there's another query with which we'll end this session, that do we have same kind of jewelry, more, fashions in online and offline retail stores, or
Yeah.
the design set?
So in fact, we have almost 1,500 designs available online, out of which we will put best 600 to 800 designs, which are our best sellers online and which have been proven their product market fit. Those products we will put offline in the stores.
There's last question from Mr. Satish. He's asking, is this in this FOCO model, what about store rent? So the store rent will be taken care of by the brand
Yes,
in the FOCO model. So
yes,
that is one of the biggest advantages of this model, that generally you go for a FOCO, you normally end up paying the rent, which is a bigger chunk of your portion. So in this model, the brand is taking care of the same, and also some good locations have been acquired. I would like to mention at least one of them. It is MGF Metropolitan Mall in Gurgaon. So MGF Metropolitan Mall is the second most favorite popular mall in Gurgaon after Ambience Mall, and the location is so strategic that it is right beneath the metro station. The metro station is named after MGF Metropolitan only. So
yeah.
and that is the entry and the most important point of Gurgaon. So anybody who is interested in a FOCO model in Delhi NCR or in other cities, we have locations as well. Please share your queries, and we'll anyways get in touch with you after this webinar one-on-one basis, and we can talk about in-depth discussion. Thank you, Ms.
So again, we
Pallavi,
have,
for taking your. Yes.
sorry. So we have one location open in Elan Miracle Mall also. And I think Area Mall is already gone, right?
Yes.
Yeah. So Area Mall is
Mm.
taken. So we have 2 locations now available in Gurgaon. So MGF Metropolitan and Elan Miracle.
Yes. So
Yeah.
thank you, Ms. Pallavi. Thank you, Dr. Amul, for being present on this call on a Saturday. Hope you enjoy the rest of your weekend.
Thank you
Thank
so
you.
much, guys. Thank you.
Thank you. So our next brand is another iconic brand and a very renowned brand in India, that is Naked by Nika, and we have Mr. Sitish from the brand side. Hi, Mr. Sitish. A very good afternoon to you. Thank you for giving your time on this weekend. I hope we are not disturbing your weekend plans.
Not at all, Sandeep. Thank you very much for inviting me and giving me an opportunity to present the brand to so many people over here. And I'm extremely thankful to you for that opportunity. So, can I start? May I start, Sandeep?
Yes, 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 yes. Sure.
Right. So, I will start with the presentation. So, is my screen visible to everyone?
Yes.
Okay. So, brand name is Naked by Nika, and I represent the brand franchisee business on pan India basis, and I'm responsible for opening new stores. So basically, in this presentation, what are we talking about? Basically, we will touch base what is the opportunity and what is the existing market. How Naked is India's leading omni-channel brand. What are the pillars for Naked by Nika? Then how does our flagship store looks like? What are our financials? What are the must-haves within our Naked store, and what is our plan going forward? So what are the opportunities? So guys, how we look at the market is that men's innerwear market is slated to grow somewhere from 15,500 crores to 21,800 crores, and it is very much kind of mature and saturated market. However, the women's innerwear market, what we consider is it is slated to grow from 38,000 crores to 68,000 crores. Hence, what we see that there is a huge scope in terms of growth for the innerwear market. Now, what we see largely in our innerwear market that it is an unorganized market, and people still fail to understand the category. There are a lot of misconceptions how to manage the returns, how the product is superior, inferior, and it is not communicated to the customers. So we find there is a huge gap in terms of giving a good customer service to the consumer. That is where our exclusive brand outlets and franchisee stores come in. So when I say exclusive brand outlets and franchisee outlets, it means that we treat both the stores same way, whether it is our own store or whether it is a franchisee store. So what is the need of a franchisee store, or what is the need of an exclusive brand outlet store? So typically, if we see, this is how a general store or a regular mom and pop store, or this is how a brick and mortar store looks like. So these are few of the photographs of the store. This is how a department store will look like. If you see, there is and one browser, and again, the representation of the brand is not 100%, is not proper. So there is a general trade where there are unorganized players, where a customer doesn't get good experience. There is a limited conversation which is happening. Then in department stores, small, there is a brand section is small, and there are not so many opportunities for bringing the brand alive, because these department stores, they want brand to be displayed in a certain manner and not as per the brand style. So that is where exclusive brand outlet or a franchisee store comes into the picture, where we are able to give a true representation of the brand. And of course, this is supported by a strong financial model. So how do we propose to address commercial? As of now, what we're saying is that simplifying lingerie for Indians and make the category more approachable. What we are saying is that we want to make the category very simple, and the functional benefit, that it is your second skin. So it has to be comfort, it has to be simple, it has to be a perfect fit. And Bhumi Pednekar is officially our brand ambassador for Nykaa Fashion. So this is just what is our customer target age group. Doesn't mean that customers 35 plus doesn't come to our store. It means that we from 24 to 35 is the age group whom we are saying that we are targeting. And of course, once the consumer has entered to our store, they stick with our brand for pretty long time. So currently, if I tell you how is our model structured, so as you all would know that Nykaa Fashion is a big e-com brand. So we have huge sales in our own Nykaa Fashion platform for Naked by Nykaa. Then we are growing, and our Nykaa platform is growing by 25 to 29% growth. On Amazon, on May 21st, we have launched our brand on Amazon, and our current run rate in Amazon is 3 crores plus as we speak. I also look after the Amazon business, and now we are already crossing 4.5 crores per month in Amazon. If I talk about general store, general trade business, mom and pop stores, brick and mortar stores, we are already averaging 4 to 5 crore rupees per month. And by December 23, we were 1,400. With the latest figures, we are now 2,000 plus stores. And what we are trying to say is there now, so as to grow the brand with the help of with the mutual support with our investors. So what we mean to say, we want our investors also to grow, and we also want to grow in the same business with the same business model. And hence we are saying that now there is a need of a franchisee business. We have opened our first store was Rajouri Garden in Delhi. And after that, we have signed many more stores. So what are the 5 pillars? How do we build the brand? How do we compete with our competition? So what we are saying is our core main strength should be educating women. We want to promote conversation. We want to promote fittings. It is just not sale. We don't just want to sell products. We want to make customer aware that how strong is the brand, what brand will do to the customer, and we want to display technically superior products. And along with this, of course, we want to have a strong financial model. So these are our key pillars, how we will win our customer. And of course, do good sales with a strong financial model. So this is how our store looks like, Rajouri Garden store. This was our first flagship store. Simple, real simple, approachable, modern, open displays, well-trained, groomed staff, large and private trial rooms. So if you see, this is how our section looks like in Rajouri Garden store. These are the photographs of our Rajouri Garden store. What we are offering to the consumer is very competitive pricing. So if you see how brand is placed is, as on today, there are many um, lingerie brands in women's category available in the market. So the number one brand would be Jockey, no doubt about it. Now, Jockey, how we compete with Jockey and then how we compete with other brands like Triumph, Amante, Clovia, Zivame, Inamar. So what we say is we are priced slightly above Jockey, but far below, not far below, competitively below other brands. What we mean to say is, like, for example, Jockey would give a good layering to the customer. However, when a customer is mature and she wants a better fit for the garment, that is when she approaches the next level brands, and the next level brands are Naked, Inamar, Amante, Triumph, Clovia. These are the next level brands in terms of premium segment. So what we are saying is we are the least price in the most premium segment, which gives a fantastic fit and a good posture to the customer. So that is how our win-win situation is in terms of technical superior products. Again, few photographs of how our store looks like. So if you will see how our store in terms of franchisee store and exclusive brand outlet store, you will not find any difference. That is what brand promises, that when a consumer comes to a franchisee store or whether a brand comes to exclusive brand outlet store, the consumer experience, what she is going to get is absolutely be the same. This is how our trial room, behind the trial room looks like. We are saying find your perfect fit and then what size is fits to the consumer and what is the right way to wear a inner wear. That is how we are showing it in the photograph. So what now coming to the financially strong model. So we are saying that store payback should be in less than 2 years, and typically in 1 year there should be a break even and store level EBITDA of 18 to 20%, and within 2 years you will have clear earnings. This is how typically our commercials look like. So what we are saying is, I will go through point by point. First of all, it is purely a FOFO model, which is franchisee owned, franchisee operated model. We are offering a margin of 40% on full price sales. On discounted price sales, we are offering a margin of 20%. First time billing will be in advance. I'll come later to the complete other financial part also. First billing will be in advance, whatever the stocks will be bought so as to display this, do the display in the store. And after that, there will be a 21 days credit period from the invoice date. So as I said, it is a completely franchisee owned, franchisee operated model. Hence, store rental, staff salary is to be paid by the franchisee partner, by the investor. Manpower, management software will be done by us, and we will be installing the point of sales in your store. LOI signing amount will be 2 lakh rupees is franchisee fee, and 3 lakh rupees will be the inventory advance, and same will be adjusted during the first time of billing. Apart from this, as I already said, rental, other operating expenditures, electricity is to be paid by the franchisee partner, by the investor. Apart from this, let's discuss about the stock correction and the discounting part, which is also a very critical point for all our partners. Now, what we are saying is that whatever is the unsold inventory left in your store, from time to time, we do mention here 6 months. It is not exactly 6 months. It could be 4 months also, 5 months also. Whatever is the slow moving, we will take it back and we will give you the fresh inventory against it. We don't want to leave you guys with any of the dead stocks, and we will, from time to time, we will keep on refreshing your store. Coming to the market discounts, we hear from in other brands, we hear a lot of complaints. that there is no parity in terms of discounts. At some channel, there are different discounts, and some channel, there are different discounts. So we have clearly mentioned in this point that what we are saying is that on all the platforms, with be it general trade, Nykaa exclusive outlet stores, um, online partners, Amazon, Nykaa fashion platforms, and franchisee partners. In all these channels, the discounts is controlled by a single person, and that one person decides that in all the channel what discounts has to go. Hence, we will maintain the discounting on all the channels. This is a simple ROI sheet. I will not go in depth. What I'm just trying to explain you is just have a look at the yellow marks. If you have a store of 400 square feet, and if you do a monthly approximate sale of 5 lakh rupees, wherein your rental is approximately 60,000 rupees, you will make 40,000 rupees per month, and your first year EBITDA will be 27%. Next year, 61%, 69%, 77%, and 83%. And these would be your every year net earnings. So what we are trying to say is first year 6 lakhs, second year 12 lakhs. So that is where you will already make the break even. And from third, fourth, and fifth year onwards, you will already start making money. It is a simple calculation what we have done. This is a simple margin structure. So if you will look at the left side, we have just explained that if 100 rupees is the MRP, tax deducted, GST is deducted 4.76, and then your 40% margin is calculated. Okay, now coming to another important point, what company will provide and what investor has to provide. So as you see first 3 points, see first 3 points, visual merchandising. So whatever the visuals required inside the store, whether it is a backlit visual or any other visual inside the store, any movable fixture inside the store, and the brand signage, it will be provided by the company, and we are not going to charge you anything for this. Now, apart from this, fixture installation, cash desk, mannequins, civil work, light fixtures, AC, fire extinguishers, CCTV, music system, desktop for billing, and drawings and Reiki. These will be the franchisee investment. Now, if I see, for example, if I open a 400 square feet store, so the very first question is for any investor will be, how much do I have to pay? So, as I already said, these things from point number 4 to 11, approximately for a 400 square foot store is going to cost approximately 7 lakh rupees. And the inventory which you are going to purchase from us in advance will be around 8 to 9 lakh rupees. So for a 400 square feet store, 7 lakhs for the interior, 8 to 9 lakhs for the for the uh, uh, for the stocks, which makes it to 15, 16 lakhs, and 2 lakh rupees is the brand fee. Approximately from between 16 to 18 lakh rupees, your store will be operational. And the first 3 things will be completely provided by us. Why we are providing is, these first three things is, we want to reduce your burden. And as I already have shown in my ROI sheet, we want you guys to make money faster so that, we can have more investments and we can have more stores opening soon. What are the basic guidelines to have a naked store? We must have 3 walls. Frontage of the store should be frontage of the store should be around 12 feet. Size should be 400 to 600 square feet. 1 trial room. We will put curtains for better experience before the trial rooms. Naked color scheme frames, pantry tables we will provide. This investment, what I have shown is without the investment of interior. So if I add 6 to 7 lakhs over here, it will come to 16 to 18 lakhs. Simple manner we have put here do's and don'ts. So the store has to be conversational, approachable, modern, inclusive, educating, fun and lively, protected. Don'ts, we will not make store exposed, intimidating, passive, post fabricated, black and white. So it has to be a colorful store. What is our goal? We are already at approximately 12 to 13 franchisee outlets plus 2-3 on fit out. So 15 franchisee stores plus 20 exclusive brand stores. So we are 35 stores across India, few under fit out, and we are planning to have 500 in next 5 years. So that would be the end of the brand presentation.
Thank you, Mr. Satish, for sharing the business opportunity with us. And also, there are one or two queries which I want to ask. First of all,
Sure.
there are two questions which come to my mind. First of all, what are the top 5 stores performance for Naked Store in
Sure.
India?
Sure. So 5 stores, I would say number one would be our Vega Mall, Bangalore, which does around, it is a 480 square feet store. It does around 18, 19 lakh rupees of monthly sales. Then our number 2 store would be Rajouri Garden, New Delhi. There we clock approximately 13, 14 lakh rupees per month. Then close to that will be our Phoenix Mall, Mumbai, and Sarat City, Hyderabad, both doing around 12 to 13 lakh rupees of sales on monthly basis. So these would be our top stores mostly. And other stores would be revolving around 10, 11 lakhs rupees of sales.
What is the minimum amount of staff which is required to run a store?
So it is 1+1. We would like to keep one store manager and one staff, so as to run the store smoothly. So till 8 to 10 lakh rupees, it can be easily managed by 2 staff. The moment we cross 9 lakh approximately rupees of sales, then we would need a third staff. But then, of course, it's a function of sales also. So after that, yeah, we would need third staff.
What are the locations you are looking at for a Naked Store? Because it can be a mall, probably it can be a high street place where a lot of women come and visit for their salon
True.
services, spa services, etc. So if you can share more about that.
Yes, very true, very true. So the brands which we are looking for to be nearby to our stores would be, for example, W, Biba, Aurelia. These are all women wear brand, ethnic Western wear brands. Biba, Aurelia, Go Colors, Baggett, Jockey Exclusive. Apart from this, I would also say Mom and Me. Health and Glow is our very good brand. We have opened couple of stores near Health and Glow, and our sales are very good. We have opened one store near Jockey Exclusive, and we are doing tremendously good sales because as I already said, that Jockey gives more of a layering. Yes, I know it's a fantastic brand, no doubt about it. But the moment the customer is slightly elevated and a customer is looking for a better fit and a better looking undergarment, it is absolutely very easy to switch from a basic brand to a elevated premium brand. That is how
And
we have positioned ourselves.
Naked has always been very specific about the target market and their audience. So it makes quite sense that Jockey, while they are a good brand and open for all kind of audiences, but Naked I think has a very specific amount of target audience, and that gives them a leverage to focus on more broad quality and specifics, right? So
Very true.
thank you, Mr. Shitish, for sharing the business opportunity. For one-on discussion, please connect our hotline at 9717683838. You can also write us at feedback@franchiseindia.in. We can always get in touch with Mr. Shitish on a one-on call basis to understand more about the brand, have an in-depth discussion. It has been a long association with Mr. Shitish and Naked by Nika with Franchise India, and it has always been a prestigious opportunity to present the business case. Thank you for your time, Mr. Shitish, and have a great weekend. Tomorrow again, we'll
Thank
come back
you.
with another business opportunity. Till then, stay tuned. Thank you.
Thank you, Sandeep. Thank you very much. Thank you everyone for listening to me patiently. Thank you. Have a nice weekend.
Same.